What's up everyone, it's Caddy with MoneyVest. So markets here continue to rip higher and higher to a new all-time high with the S&P 500 approaching over 5,030 points. Congratulations to everyone who's kind of stuck through for this entire journey. Huge day for the markets, of course, on Friday with a new all-time high being achieved. And the NASDAQ here still has a little bit of ways to go, but almost at 16,000 now. Did hit 16,000 during the day, but of course rolled over and closed at around 15,990. Break down everything in this video. We've got a huge week coming up next week with inflation numbers that are going to be scheduled for the day before Valentine's on February 13th. I've got a video coming out later today for that as well. As always, make sure that you drop a like, subscribe to the channel. If you're just joining us for the first time, I did open up a few more spots for our Discord and our Patreon if you want to join and access all the members-only private videos. There's over 46 videos that you can watch, including the more recent one, the 12 stocks that I'm buying and I'm planning to buy with my buy target, specifically outlined my entire shopping list and the ETFs that I'm also dollar cost averaging into, along with some tactical trade ideas that are going to be super useful in the future as well. And you can also access all the trade alerts, binds alerts, options alerts, including all the spreadsheets with our fair values, our watch list, our S&P 500 valuations, and volatility spreadsheet as well. I also do want to mention, again, do check out the Instagram. My handle is going to be CasWRP. Feel free to connect with me there also. One more thing I want to mention is that this is a post. I mentioned everyone in Discord that dropping a quick update. The MoneyVest tech team is hard at work building one of the best financial analysis, fundamental analysis, plus macro analysis platforms out there. I'm personally overseeing the entire project and working with many API providers, including CME, FinHub, CBOT, NYMEX, and over time we'll add more stock-specific and crypto and currency data providers. But for now, I wanted to drop this update that will be launching the beta test soon, hopefully sometime in March, and I need your help. The beta launch will be for members only, for all Patreon members only. So it'll only be open for current Patreon members, and there will be a feedback feature which will allow you to provide us feedback on the functionality, the use case, the design, the analysis, everything, right? So you'll be able to kind of look at the whole software, the whole platform, play around with all the features and see what it is that you love, what it is that needs improvements, some changes, what would you prefer? Let us know and we'll make the changes because we want this to be the best product for you. That's the whole idea. I want this to be very, very customer centric and for you to have the best experience, the best functionality when it comes to this fundamental analysis, macro analysis platform. So please do share the feedback so we can continue to improve this moving forward for you. I will let you know the sign up process, and when it's live, it'll be at moneyvest.com, and look forward to the next big chapter in our community because everything will live on the website moving forward, from courses to community access to portfolio dashboard to your fundamental analysis, calculators, macro analysis. Everything is going to live on the website moving forward. So we're super excited for this, and very, very looking forward to, bringing on more and more users over time to the moneyvest.com platform as well. So NASDAQ here almost at 16,000, S&P over 5,000. We continue to rip higher and higher. We are now in extreme greed, folks, at over 78. And one of the messages that I wanted to share in my previous updates as well is that this is the type of market that sucks you in. This is the type of market that draws a lot of liquidity in because a lot of people see a lot of stocks pushing higher and they want a piece of the pie. They want to be in on these companies. And as a result, they start putting money back to work when it is not indeed the perfect time. In my opinion, the risk reward is not that great, as I've already mentioned. So I'm kind of sitting tight. I'm still dollar cost averaging into, let's say, VUG or SMH or Cyber. But when it comes to individual stocks, I may pick up, let's say, some Enphase or some PayPal, companies that I do believe have a lot of potential to move back higher. But until then, I think there's still some extreme greed where the risk reward is not that favorable. So stock market crash, expert warns for a ripe for 10 to 30% drop in the S&P 500. So according to John Hussman, the president of Hussman Investment Trust, who called the 2000 and 2008 market crashes, the record highs may not last long. In a February 4th note, Hussman said that a group of stock market indicators he monitors show that conditions are just about as worse as they've ever been and resembles those seen in a major market peaks in recent decades. His list of indicators touch on stock valuations, investor sentiment, and other proprietary measures as well. In some of the charts, again, he does point out to the idea that this is an extremely greedy sort of market environment where valuations are high, sentiments very optimistic, and there is a lack of risk assessment among investors, which definitely do indicate some overbought, overextended conditions, where dozens of measures include valuations, internals, overextension syndromes, and numerous technical, fundamental, and cyclical gauges we've developed over time. And we estimate the current market conditions now cluster among the worst 0.1% instances in history, more similar to major market peaks and dissimilar to major market lows than 99.9% of all post-war periods as well. So look, a lot of people are going to call for market crashes. A lot of people are going to call for this prediction the markets are overbought and overextended and they're ripe for a significant sell-off or a crash. The idea here, again, is not to make those predictions, because if you hear about this prediction and you start selling stocks and start getting out, then you get into this idea of timing the market, right? This is absolutely the worst way to do it, because in my opinion, when there is some type of analysis with respect to this market crash or this prediction, for the most part, I ignore these types of predictions because I'm always looking at the current risk reward. How is the market positioning right now? What is the valuation? Where's the volatility? What's the technical levels? How's the market breadth? How's the concentration among these magnificent 7 or core tech stocks? And then make a decision based on what I see in the markets today, not what I predict the markets are going to be tomorrow. Because the latter is not useful. The latter is something that you cannot do over and over again. You can only assess the markets today in the present moment and have a much better understanding of the present moment. So that being said, the idea and the key takeaway for me is really to not be super aggressive in buying right now. Of course, hedge your positions. I'm personally hedging with calls. I'll be looking at selling calls to hedge that potential downside. I'll be raising some cash, de-risking a little bit to take some profits off the table, kind of rebalancing the portfolio for specific stocks that are overweighted in my portfolio. I've done a video on rebalancing as well, so make sure that you do check that out as well. So we'll be doing that, but not necessarily selling entirely in hopes of this predicted crash that may or may not happen, because that again gets into that idea of timing the market. And what if the market continues to drift higher? Then you kind of feel like you're missing out on this potential gain. So it's really important, right? Time in the market always beats timing the market. But at the same time, when you do feel things are getting frothy, valuations are high, you can employ strategies like hedging, de-risking, rebalancing to kind of position yourself well for when the markets do pull back or sell off, to start deploying and start buying once again. So that is really what my sort of analysis is more about, instead of like selling and buying puts and shorting the market in hopes of this predicted crash, which may or may not happen. So 5,026 puts us at around 22.3 times earnings multiple on a 2023 basis. Forward puts us just over 20, given that the earnings per share expectations for 2024 are $247, which again is quite reasonable. Volatility continues to be a little bit more on the rare territory right now. And this right here is how the markets performed. On Friday, energy stocks pulling back, but Amazon up a little bit over 2.7, Tesla rallying over 2%. Google up 2%, NVDA up over 3.5%, Microsoft also pushing up 1.5%, Apple pushing up over 28 basis points. We did see a lot of momentum for a lot of these comm services, cyclicals, technology, and a lot of these companies, with energy stock selling off, real estate, industrial, healthcare, consumer defenses, all of them pulling back as well. So a little bit of a mixed day for the market, but technology, comm services, and cyclicals, all of them pushing higher, with consumer defenses, energy, materials rolling over. In the last 1 week, we've got a little bit of a split market, with some sectors pushing higher, some sectors rolling over. Of course, in the last 1 month, again, a little bit of a split market, with technology, comm services, industrial, consumer cyclicals, financials all pushing higher, with materials, real estate, utilities selling off. Coffee prices, cotton, heating oil all pushing up, with canola, platinum, orange juice, natural gas, and palladium selling off. Bitcoin back over 47,000 very nicely, and Ether just over 2,400, just a little bit under 2,500 as well. So going over to volatility first, continues to be very, very muted and subdued, a little bit under 13, up almost 1% right now. So resistance and target's going to be back up to 1497, close to 15 levels once again. So this right here is going to be that level, with of course a support, or not really that support, but a very important level inside this red rectangle sitting between 11 to 12 levels. The moment it crashes below 10 is the moment where I would be very, very careful and alert with this market momentum, because even right now the markets continue to drift higher to new all-time highs and volatility continues to trade sideways in that range. So even though the VIX was slightly higher, the markets continued to push higher as well, which happens very rarely that both the VIX and the markets are green. Crude oil prices continue to see a little bit of that recovery back up over $76, $77 a barrel, and resistance and targets going to be back up to 81, close to $82 per barrel for crude oil, with the support levels going to stay put inside this green rectangle between $71 and $73 a barrel for crude. And again, inflation numbers do come out next week, and in the month of January, energy prices were up, unfortunately, so that may impact overall inflation, which of course could impact markets' reaction as well. So going over to a lot of individual stocks, starting with S&P 500, brand new all-time high, over 5,000 points here, extremely overbought RSI with a little bit of that negative divergence that's continuing. MACD also continues to move higher, and the price itself continues to trade at an all-time high with a very nice green candle coming in once again. Just got to be super careful here because, this is an all-time high that we have never really seen. This is uncharted territory, lots of price discovery that needs to happen. But at the same time, we're looking at a market that will continue to suck up all liquidity that's kind of coming its way because investors' optimism is really, really high. We're in an extremely greedy sort of market environment. So yes, we could continue to drift higher, but the marginal upside here versus the potential downside risk is not that favorable. That's the idea. The risk reward is the idea here. Can the markets go higher? Yes, absolutely. They can go higher. But the idea isn't that they will go higher. The idea is how much potential upside there is relative to that potential downside. And that's the risk reward analysis, which of course does not look super favorable. And as a result, I'm looking only at selling calls to hedge my positions to the downside. Downside speaking, NASDAQ here continues to rip higher, up a little bit over 1% to just under 16,000. RSI, MACD, once again, a bit more overbought. We've got a little bit of that negative divergence, and it's almost back up to its all-time highs. 16,200 is going to be that level to keep in mind for the NASDAQ as well. So that is going to be that next target and that resistance to keep in mind for the NASDAQ, and support level is going to stay put roughly here at 15,600 for the NASDAQ as well. So a little bit of that support, resistance back up to 16,200, almost at those levels. Talking about Apple, and Apple here, pushing slightly sideways, down up over 20 basis points. So this right here is the overall analysis. So still within the context of a little bit of a downtrend. Of course, bouncing off of 180. So that is going to be a very strong support level to watch for Apple, and resistance up to as much as 189, close to $190 per share for Apple, and all the way up to as much as 194, 195 for Apple. So that is another going to be a very important resistance, and that lower high support level is going to stay put down to $180 per share for Apple as well. So lots of consolidation sideways for Apple, and this right here again is going to be that downtrending channel within which it's trading. Amazon, on the other hand, continues to break out to a new 52-week high at 175, up over 2.7%. I've got a separate, more dedicated video coming out on Amazon very soon, and it's been very strong rallies from lows of about 121. It's up over 43, 44%. So resistance is going to stay put at roughly around 176, 177. So that right there is going to be that resistance level to watch, with the support sitting roughly at 155 for Amazon as well. So very, very strong momentum higher for Amazon. And like I said, resistance and targets now sitting at 176 with a very nice strong breakout to the upside potential, with the RSI also overbought here. Tesla on the other hand, and Tesla on the day pushing up over 2%, bouncing back higher a little bit from that $180, $185 support. So this right here is the overall downtrending channel that we talked about for Tesla. So lower highs and lower lows. Resistance is going to stay put in the 200. So that is something to keep in mind for Tesla. So we're kind of approaching this red rectangle. Again, that is going to be a level to keep in mind as a resistance between 197 to as much as $215. So very much within the context of this downtrend, lower highs and lower lows, and bouncing off of that support in the 180s for Tesla right now. So resistance, like I said, it's going to be back up to low 200s to as much as $244, $245. And I will be looking at selling some calls here for Tesla very soon, with a very nice bullish signal, with the MACD crossing over that signal line, and the RSI also showing signs of some potential upside here for Tesla once again. So that is something to keep in mind for Tesla's technical analysis. Talking a little bit about PayPal, and PayPal here also recovering very nicely, up over 4.9, almost 5% on the day. So pushing up, and still within the context of this downtrend of lower highs and lower lows, but that next resistance and target's going to be closer to $66 to $67 per share for PayPal, with the support level is going to stay put in the 50s. So a little bit of the earnings sort of a hangover here. We obviously did sell off and then recovering back now. And this right here is a gap that it needs to fill back in. And that's going to be sitting roughly between 59 to as much as $62, and resistance and target's going to be back up to $67 for PayPal. Talking about Visa. And Visa here also just pretty much trading at an all-time high, so continues to trade sideways in that range. And again, support level is going to stay put roughly in the 260s to as much as low 240s, 245, 250 here for Visa. And resistance and the target recently is going to stay put at $279 to close to $280 per share for Visa. So that is going to be that target to watch for the company. Talking a little bit about NVIDIA, and NVIDIA here continues to trade at an all-time high. This is absolute madness, and even on Friday, another 3.5% day, $721 for NVIDIA, and it's just absolutely crushed, the breakout here from this ascending triangle, 52% rally. I mean, just absolutely incredible for a stock that's worth over 1.7, almost 1.8 trillion dollars now, and support level is going to stay put at $499, close to $500 per share for NVIDIA at the moment. So, not a lot to go over other than the fact that the RSI and the MACD looks really overbought, and the price action itself is incredibly strong for NVIDIA. AMD, on the other hand, kind of feels like it's forming a bit of a symmetrical triangle, so a little bit of a lower high and a little bit of a higher low for AMD. So if you do get a potential breakout above this, it's a symmetrical triangle. 185 is going to be that next resistance, and then of course beyond that, we're going to be looking at another breakout to new all-time highs, possibly. And there's some support here, at the 21 EMA. So if I bring up the 21 exponential moving average, or even the 50, you'll notice that we have continued to validate that level of support here, and just continues to kind of drift higher with higher highs and higher lows as well. So that is going to be the analysis here on AMD, with the resistance at 185, support at 157, with a little bit of that symmetrical triangle formation. Talking about Meta platforms, and Meta here on the day starting to roll over a little bit on Friday, down about 40 basis points. And again, support level is going to stay put down to 449, 450, down to as low as around 385. We've also got a gap to fill here for Meta. So if and when it actually does fill this gap, next support, like I said, it's going to be aligned with that 21 EMA, sitting roughly at $383. In fact, actually, I think that's going to be the 50 EMA for Meta. So that's going to be that level. $383 is going to be that support. Talking about Netflix, and Netflix here also just consolidating sideways, getting rejected at 571. So that is going to be that resistance to keep in mind, with a gap to fill and a support level down at the 496 to 485 level for Netflix. Lots of consolidation sideways for this stock, and of course, much stronger support in the 445, 446 range for Netflix moving forward. Talking about Google here, Google also with a very nice recovery. I did an earnings video not too long ago talking about how this was a bit of an overreaction for Google, bouncing off that level very nicely from the support of 139, 140, and it's rallied a little bit close to over 8% from those levels, and resistance is going to stay put roughly in the 150s for Google, and I do believe in a much stronger support and a much better sort of area of fair value is going to be in the low 100s for Google, but a much stronger support also in the 120s for this company as well. But a very nice recovery back up nonetheless. 150, 151 is going to be that next target, and the resistance that we're watching right now for Google. Microsoft, 420, new all-time high, over $3.1 trillion market value, 1.5% in the green. Very, very nice move to the upside. Support level is going to stay put at 384, 385 for Microsoft. And of course, a very nice, strong momentum back up. Price discovery, uncharted territory. So we just got to wait and see where that next resistance ends up being for Microsoft as well. And then finally, we got So going over to Costco, and Costco here also just continues to drift higher and higher to a new all-time high. a little bit of a rising wedge pattern, so I'd be super careful with where Costco is. And there is a potential for a pullback, as we've already discussed, given that there is a negative divergence. The rising wedge pattern support level is going to stay put down to 670, down to 644, to as low as $588 per share for Costco. And finally, we got Enphase with a very nice move to the upside, up a little bit over 4.7, almost 5% green on the day, bouncing off of that support here in the low 100s, and resistance and target's going to be back up to 138 to as much as 151 for Enphase moving forward. So those right there are going to be a couple of resistance levels to watch for Enphase. We're also seeing a MACD crossover the signal line, and the RSI also recover back up a little bit really well. So hope you'll enjoy this video and a complete update on the markets here. Next week's going to be super important with, of course, inflation numbers coming out, and the markets continue to rip higher to new all-time highs. There's definitely a lot of skepticism around these rallies and whether this can continue or whether there is a pullback or quote-unquote a crash on the horizon. But I wouldn't read too much into these types of analysis. The bottom line is the risk reward is what we need to assess. And right now, yes, it is quite unfavorable. So from that perspective, I'm not really dollar cost averaging into the markets right now, and I'm not going super aggressive with my buying either. I'm de-risking, selling calls, I'm hedging, and I'm also rebalancing the portfolio to prepare myself and position myself well for if and when the markets do drop, so I can deploy some cash back into the markets as well. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. We'd love to have you on board. If you have any questions,